I know a lot of people are worried about all the AI hype, but as we're looking to the future, especially with embodied AI, which is all about robotaxis and transforming the world of transportation completely, and then healthcare, which is probably one of the most profound applications of AI. We think that this investment will pay off, and I think the chaser is going to be humanoid robots. And I think that is going to be the biggest of all the embodied AI opportunities.
Every great technological revolution begins quietly, long before the headlines catch up. And right now, we're standing at the dawn of another. From homes and hospitals to corporate boardrooms, robots aren't just machines anymore. They're intelligent coworkers, caretakers, and silent assistants shaping how we live and work. The robotics market, valued at over $40 billion today, is projected to surge past $200 billion by 2030. But here's the catch. The biggest profits won't come from the loudest names. They'll come from the visionaries quietly building the next generation of smart automation. Today, we're diving into 4 robotic stocks redefining their industries. Each one represents a different frontier: consumer robotics, surgical robotics, simple robotics, and software robotics. And together, they paint a powerful picture of where the world is heading. iRobot, IRBT, the comeback machine. Every comeback story begins with a fall, and iRobot's journey has been nothing short of dramatic. Once the undisputed king of home robotics, iRobot's Roomba became a household name across the globe. But after Amazon's acquisition deal collapsed earlier this year, the company found itself at a crossroads. Yet, beneath the market panic lies a story of reinvention and quiet resilience. In its latest Q2 2025 results, iRobot surprised Wall Street with an EPS of $0.27, crushing estimates that expected losses to be more than triple that. Revenue came in at $127.6 million, modestly above expectations, proof that cost-cutting measures and product efficiency improvements are starting to bear fruit. The company's sales in Japan rose 6%, partially offsetting double-digit declines in the US and Europe. With a new wave of product launches planned for early 2026, including AI-driven vacuum systems that map and adapt to user habits, iRobot is betting big on smarter, more connected homes. Still, this is no easy ride. The company has warned of liquidity issues and is exploring refinancing options, signaling that survival depends on sharp execution. But history favors those who adapt, and iRobot's brand recognition, intellectual property, and data-driven robotics experience give it a fighting chance. For risk-tolerant investors, this is the kind of deep-value turnaround play that could either vanish into history or double from the ashes. Intuitive Surgical ISRG, the scalpel, and the robot. If iRobot is fighting for redemption, Intuitive Surgical is defining perfection. This company isn't just part of the robotics revolution, it is the revolution in healthcare. Its flagship Da Vinci surgical systems have transformed operating rooms around the world, enabling surgeons to perform complex procedures with superhuman precision and control. In its latest Q3 2025 earnings, Intuitive delivered blockbuster results. Revenue surged 22.9% year-over-year to $2.51 billion, while EPS hit $2.40, far exceeding analyst expectations. The company's installed base of Da Vinci systems continues to expand globally, and each new unit fuels a lucrative ecosystem of recurring revenue from surgical instruments and service contracts. Analysts have been quick to respond. Evercore ISI raised its price target to $540, citing accelerating demand and expanding procedure volumes. Intuitive's secret isn't just technology, it's trust. Over 14 million surgeries have been performed using its systems, creating data and expertise no rival can match. As hospitals shift toward minimally invasive care and AI-assisted diagnostics, Intuitive is positioned to dominate. And with operating margins consistently strong, this stock offers rare exposure to robotics and profitability, a blend few others can match. For investors looking for stability with innovation, ISRG is the gold standard of robotic precision. UiPath, the invisible workforce. While iRobot cleans our homes and intuitive surgical saves lives, UiPath builds robots that don't have arms or wheels, but work silently inside our computers. It's the leader in robotic process automation (RPA), a sector that's rapidly transforming how businesses operate. From banks to hospitals to Fortune 500 companies, UiPath's software robots perform repetitive digital tasks, freeing humans to focus on creativity and strategy. In its most recent quarter, UiPath reported revenue of $362 million, beating expectations, with EPS of 15 cents versus forecasts of just 3 cents. Annual recurring revenue climbed to $1.72 billion, up 11% year over year, proving that demand for automation remains strong even amid economic uncertainty. What's truly exciting is UiPath's expanding partnerships with NVIDIA, OpenAI, and Snowflake, collaborations aimed at fusing generative AI with enterprise automation. Imagine a future where AI agents not only complete your tasks, but anticipate them before you even ask. That's UiPath's vision. Financially, the company is on firmer ground than many realize. Gross margins hover above 80%, with positive operating income signaling a maturing business model. Still, challenges remain. Growth has cooled from the hypergrowth days of 2021, and competition for Microsoft and automation anywhere looms. But UiPath's early lead, ecosystem partnerships, and integration into major enterprise systems give it a powerful moat. If you believe AI and automation are converging into the next trillion-dollar opportunity, UiPath might be your gateway. Symbotic SYM. Symbotic is at the forefront of warehouse automation, using AI-powered robotics to help retailers cut costs and streamline operations. Its systems are already powering Walmart's and Target's distribution centers, with more major retailers joining in. In Q2 2025, Symbotic reported $550 million in revenue, continuing its rapid growth trajectory. Recent updates include Walmart doubling down on Symbotic systems, expanding automation to nearly all of its regional distribution centers. Symbotic also announced expansion into grocery and pharmaceutical distribution, opening new markets for its robotic solutions. The company has built a powerful moat. Once a warehouse is automated with its system, it becomes deeply embedded and very hard to replace. As global retailers race to improve supply chain efficiency, Symbotic is in prime position to become the default standard for warehouse automation. As we enter 2026, the robotics sector is expected to grow faster than almost any other technology industry, with AI serving as its catalyst. Yet, despite the massive potential, many of these stocks are still underowned, meaning investors who move early could capture a powerful upside. So, the question is, which side of the robotics revolution will you be on? The one watching from the sidelines, or the one holding the future before it's fully built? If you found this breakdown helpful, make sure to subscribe, and hit the bell, because the next episode dives even deeper into the hidden AI infrastructure stocks powering the next generation of robots. The future is being automated, and it's happening faster than anyone realizes.